Hello everyone out there, this is Peter Harris with Commercial Property Advisors. I hope you're doing all well today. Ladies and gentlemen, we are headed for an economic storm in our country. And I have three questions for you. Number one, are you prepared? Number two, are you ready to capitalize on the coming economic storm? Or number three, are you just going to let it happen to you? Just like when a woman is pregnant, about to give birth, she has birthing pains. Our country right now is about to give birth to an economic storm, and behind me on the screen are the birthing pains that we are experiencing right now in this country. Look at this. Number one, rising interest rates. That is a pain for us, right? It really is for all of us investors. Number two, high inflation. That's affecting all of us. It is. Number three, there is a looming recession, a recession about to happen. Are you prepared for that? Number four, home prices. Home prices are dropping. They are. Number five, stock market falling. I feel sorry for you, stock market guys. Foreclosures. Foreclosures are on the loom. Who knows when it's about to pop? Number six and number seven is job layoffs are happening. I live in the middle of high tech, and every week I see high tech companies laying off folks by the hundreds. It's happening. And lastly, small businesses are closing. All around the country, small businesses are disappearing. So in this video, what I want to accomplish in this video is share with you how to capitalize on the coming economic storm. Number two, what to have in place to prepare yourself for this economic storm. And number three, what to do today, right now, today, right now, so that we can help you create generational wealth in commercial real estate. Let's get started. All right, before we get started with the actual to-dos and how to capitalize on the coming economic storm, I want to share with you the four most dangerous words in real estate investing. Here they are. This time it's different. Four words, very dangerous, the most dangerous words in real estate investing after being in this business for almost 25 years. Okay, been through three up and down periods and three recessions. I can tell you that these are the four most dangerous words. This time is different, because that ain't so. Okay, it is not different. Okay, the birthing pains, the symptoms are different, but the results will be the same. You're going to have people who fail drastically over here. You're going to have people who prosper over here, right? And it's because of these four guiding principles that never change. They either follow the guiding principles or did not follow them. Here they are, right? These are four guiding principles that never expire. Number one is to always buy on cash flow. That's what we teach our students. Commercial real estate is a cash flow business, which leads to number two is to minimize your speculation. These days, with the looming recession and the job losses and layoffs and high inflation, there's no room for speculation. Okay. Number three is to be a good operator. So when you purchase your commercial property, even as a single family home, you have to really understand and become good at the business and managing the property. Okay. Now, if you have a property manager like most of our students, you need to learn how to manage the property manager very well. This is an art and science that we teach our students to do. Okay. It is an art and science. Okay. It's not something you can go on YouTube and learn how to do. You really have to learn from people with gray hair on how to do that. Number four is this is obvious, but people still do this today. Is to not over leverage. Okay, so these are four guiding principles that will never expire, no matter where you are in this economic downturn. All right. Now let's move on to how to capitalize. I'll give you the actual to-dos. How to capitalize on the coming economic storm. Here is your first piece of advice. Right? It's your first to-do. Here it is, and take it to heart. Okay. Now, your first bit of advice here to help you navigate and capitalize on what's coming is to get cycle-tested advice. Okay? real estate cycle advice. Real estate is a cycle, right? It's a cycle. There are 4 phases to every real estate cycle, and to help you navigate these upcoming, troubled waters, you need to have experience navigating through the entire cycle. So if you do not have an advisor that has not experienced the full cycle, be very leery of that person, that company. Okay? Now, let me break down for you what I mean by the real estate cycle. Okay? Now, this is a economic real estate cycle right here. Okay? And it's in 4 phases. We have the recovery phase. The second phase is the expansion phase. The third phase is the recession phase. And the last phase is called the excess supply phase. Okay? Now, let me break it down for you. On this recovery phase, this is the first phase. If you recall, in 2008 to 2012, we were recovering as a country. Okay? So this is what we call a buyer's market. You should have bought then. Yes, it was scary, but prices have doubled, sometimes tripled if you bought here. Okay? All right. And then we enter the expansion phase. This is what we have experienced since 2012. Last 10 years, we've been expanding, right? And it's been a seller's market. Sellers have been commanding high prices, and we've been giving it to them because prices still go up, right? But things are about to change, aren't they? Right? So after this expansion phase, some people, and I believe that we're right around here now, okay? Where we're about to make the turnover into the recession phase of this real estate cycle, okay? This is the most important part of this entire phase here. This is where, if you're working with someone who's only experienced the expansion, be very careful of what advice you take from this person, because how do they tell you how to navigate here if they haven't been here before, okay? We have, and our staff has, and we've been here multiple times. This is a very critical phase of the real estate cycle. So the average person would say, okay, you're going to go from buyer's market to seller and come back down. It's going to be another buyer's market. No, this is not a buyer's market. It's what we call a balanced market. Let me show why. Okay, us as investors, we've been making offers lately below the asking price because our interest rates are so high, our property's cash flow less, so we can't afford the highest price. Okay, that's just the fact of the matter. Well, we have the sellers who are still anticipating and expecting the high price. Okay, so we have this gap here between what I want to offer, right, and what they want. There's a gap here. That's called a balanced market. It's very critical phase of investing right now. But guess what? The 4 guiding principles still apply here. Okay, they are to buy on cash flow, don't speculate, be a good operator, and don't over leverage. Okay? The people that are, some of you 30-year-old advisors, or people that have been in this business for 10 years or less, you've only experienced this. This is about to happen. It's very critical of what you do right here. Right? So only get advice from people who have been cycle attested. Who have been here before. Very important. Okay, very important. So the 4 guiding principles apply here. There's lots to consider here. Okay, lots. I could do an entire video just on this section here. There's a whole bunch to talk about. Okay, once you get past the recession cycle, then you get into the excess supply cycle and turns into a buyer's market. Okay, some of these guys believe it's a buyer's market. No, it's not. It's a balanced market. You have to navigate very carefully or you're going to get in big trouble. All right? Okay, so that was the first piece of advice I'm going to give you, how to navigate this upcoming economic storm. Let's go to the next piece. The second piece of advice I'm going to give you here on how to capitalize on the upcoming economic storm is right here. I'm going to share with you the actual property types we recommend, okay, that we like, that we personally own, and number 2, the must-haves if you're going to purchase properties on this side. All right, so number 1, the property types we like the most to help you capitalize on what's going to happen there are apartments, storage, and mobile home parks. Here's the reason why, okay? Apartments are the obvious choice, okay? Because the Feds, by increasing the interest rates and inflation out of control, you will look back on this year as a year that the Feds have created the biggest rental boom in American history, okay? That's my personal opinion. I already see it, and I think next year it's going to get even better for apartment investors, okay? So everyone needs a place to live, right? Everyone does not need a place to shop, right? To do other things, but to live we do. So apartments are going to be it for now and the next few years. Number two, we like storage. And this applies to self-storage, RV storage, industrial warehouse. We love all of that, okay? For various reasons. The main reason, if I can talk about storage, is when the economy is doing well, people buy a whole bunch of stuff and they need room to store it. So they will put it into their stores, they'll rent from us. And when the economy retracts or gets smaller, they will downsize because they bought too much stuff, and they'll put their prized possessions into storage. And some of you will say, well, you know, if there's a recession, they can't afford storage. Yes, they can. All right. So because storage is relatively inexpensive, right? So you have your stuff that you value, then you have the low cost of storage. Okay. One of our students bought a mobile home, a RV storage, and there's a $275,000 RV home here that in his lot. And he charges them $125 a month to store his RV there. Okay, very affordable. Now, number three is mobile home parks, right? The reason why we like mobile home parks is because they aren't building any new mobile home parks, okay, all across the country. They're not wanted, right? So we're stuck with them. And the mobile home parks are on the lower ring of people that can't afford apartments or homes. And they're in this lower category. We will always have this category in our country no matter what. Okay? So it's right now there's just a huge shortage, and it's increasing of supply that we need to meet the demand here, and it's getting larger. So all three of these will have videos that I want you to watch so you can see the benefits, the basic benefits of all three. Okay? Now, next, we like these types, but they are to help you navigate the upcoming economic storm. There are a few must-haves that you need to pay special attention to. Here they are. Okay, here are the must-haves, and you need to have extra attention for what's coming. Okay, number one is any of these types that you're going to purchase, you need to have your underwriting to be conservative, okay? Underwriting is how you value the property, how you do your cash flow, how you plug it into the calculator, things like that. So you want to have conservative underwriting. Why is that? It's because when a recession happens or things happen, things will be volatile. Rents may go up or down or sideways, and vacancy may go up or down or sideways. You know, things may, we had a pandemic where things got kind of squirrely, right? So so on your cash flow projections, you want to temper those a little bit. So if you think the next 5 years you're going to have this in rent increases, which we may have, you may want to go like this, just to be conservative, okay? Also, your ROI expectations, your return on investment expectations need to be tempered too. Mine are because, last year we were paying, 3.79% for interest rates. Now we're paying close to, we're in the sixes, maybe even sevens by the end of this year, right? So the interest rates are higher, went like this, but the rental rates went like this. So the ROI expectations need to be tempered just a little, okay? We can help you with that, okay? Number two, the second must-have, it concerns your loan balloon date, okay? Hear me out here. When you purchase a home, residential, okay, real estate, okay, whether it's a rental or somewhere you live in, when you get a loan, it's 30 years fixed, okay, so you lock it in, you're good for 30 years. That is fantastic. In commercial, it doesn't work that way. Okay, in commercial, when we get a commercial loan, we'll have the payments will be amortized over 30 years, but the loan becomes due. It balloons in 5, 7, 10, 12, sometimes 30 years, but mainly is 5, 7, 10, and 12 years. That means in those 5, 7, 10, 12 years, we have to get a new loan. Okay? So if you get a 5-year, if you get a new commercial loan and it balloons in 5 years, and we are still in this muck of an economy in year 5, and you have to get a new loan, where will your property, where will the economy be, where will the banks be in order to get you out of that loan and get you into a new loan? It may be kind of mucky there, so why not just have a loan that's at least 7 years 7-year expiration or longer? Okay, so I just went over with you the difference between residential and commercial, and we recommend to help you navigate the economic storm. The must-have is to do a 7-year or longer commercial loan. Okay, 7 years or longer. Okay, that's how you're going to capitalize on this and be able to weather the storm. Number 3, this is so important. People don't talk about this on YouTube or in books. It is so important. This is what I think we are masterful at with our students in helping them design strategies for their exit of their projects, okay, their commercial projects. We call this exit strategy. So important. Now, when we enter an economic storm and things get volatile, you need to have more than one exit strategy. So one is not enough. Some of you say, Peter, I'm going to hold the property for 7 years. I'm going to sell it. I'm going to exchange to a larger property. Or Peter, I'm going to buy the property in year 3. I'm going to do a cash out refi, pull all my money out, pay my investors back, and buy another one. That may all change, okay, with what's coming. So it's okay to plan like that, but have a more than one plan, okay? Now, the second thing is your exit strategy must be crafted by one who can see the future, right? That's my quote, by the way, but I'm going to show you where it came from. When I was an engineer, I had a mentor. His name was Nick. Incredible guy, right? Incredible guy. Old, Japanese, gray-haired guy, cool beard, the most awesome guy in the world. And he would just tell me things about technology that we were engrossed in, that this is what will happen in the next few years. And I'm thinking, no way, that's just too far out there, Nick. It's not going to happen. Guess what? It happened. Several times in my decades of working with him, he predicted the future. How did he do that? It's because he's been in it for 30, 40 years. That's why. So he could predict the future. When me, I was a young guy, and I would just see what was happening now and what I could read and see. But he's been in it for so long, he had a gut feeling of where the market was going, and he was spot on. Okay? Spot on. So your exit strategies must be crafted by one who can see the future. We help our students the best we can to see the future, to plan out how to prosper from this economic storm. It takes skill, it takes years, it takes scars to be able to craft an exit strategy that's going to make them a lot of money down the road. Okay? All right. Everyone, I just want to say thank you for hanging out with me today. I hope you enjoyed this video on how to capitalize on the coming economic storm, because it is coming. We see birthing pains right now. So again, are you prepared? Are you going to capitalize on it, or are you going to let it happen to you? Okay? I hope today was very helpful for you on what to do. All right, so please like this video if you like it. Leave a comment below. Let me know what your comments are. Right? A lot of controversial topics I just went over. And if you want more, just go ahead and subscribe to our channel or check out our website, commercialpropertyadvisors.com. Thank you, everyone, and I'll see you at the next video.